Welcome to the SpreadX financial market preview for Monday, 17th of September. This week we're going to look ahead at cable, which had a bit of a recovery of late.
Yeah, that's sort of down to Michel Barnier. He's become a bit of a pound whisperer of late. Whenever he sort of issues any kind of statement, be it sort of tepidly positive or genuinely actually positive, the pound seems to rise. I think the pound is basically at the moment taking whatever it can get and really sort of making the most out of Barnier's positive comments, or ringing them for whatever growth it can, which has, to be fair, worked. It's sent the pound back above 1.30 against the dollar. It actually rose to 1.31 at one point in the aftermath of some fine but slightly disappointing US inflation figures on Thursday. That sort of casts a smidge of doubt, perhaps not over a September rate hike from the Federal Reserve, but maybe it's guidance for the rest of the year. If inflation continues to be soft in the US, it might go from like its current gradual pace to a very, very gradual pace, perhaps into 2019. In terms of what the pound's got to deal with this week, it's got its own inflation figures on Wednesday. Inflation seems to settle between 2.4% and 2.5% across spring and summer. So I think the investor's going to be looking for, well, what way is it now going to go? Is it going to continue to hold at that, or is it going to show signs of falling further or rising above that 2.5% cap that's sort of been in place for the last couple of months? Then on Thursday, you've got August retail sales figures, which the early word seems to be that it's not going to be a particularly pleasant number for the pound. There's been a lot of reports suggesting that it was a really tough month for investors, for the high street and retailers. The heat wave, I think, just gives people something else to do that isn't shopping. Doesn't mean they have to spend any money over that period. Plus, wage growth was better than expected last week, but still wasn't great, and wages has still gone under a squeeze in 2018 that will continue to impact things, especially when there are freer alternatives like being in the sun, basically. In terms of what our clients are doing, whenever the pound has now crossed 1.30 up to 1.31 against the dollar, our clients have now been selling around those levels. I think they're perhaps seeing that the pound, has had a decent run off the back of some positive to sort of middling comments from Barnier, but it needs something a bit more than that if it's going to continue to go beyond 1.30 with any sort of longevity or substance, really. And I think that's why we've seen our clients selling around the 1.30 mark, heading into the inflation figures and retail figures on Wednesday and Thursday.
So staying quite range bound.
Yeah, exactly.
Okay, thanks very much, Connor.